All right, everyone. So, welcome to KF Investing's weekly webinar for March 4th today. We have some really exciting information that I think is going to be very helpful for us to review today. And we're going to cover some information that basically all new traders have, and even experienced professional traders still often kind of get away from and forget. So, it's going to be a good brush up regardless of where you are at in your trading learning curve and whatnot. So, let's go ahead and get started here. Uh, I want to talk about time of day and volume and when are the best times to trade in the stock market. And I want to explain more specifically why we trade at the times that we do. So here's some critical times here to just keep in mind. All right. The stock market opens at 9:30 a.m. Eastern time and closes at 4 p.m. Eastern time. So that's only 6.5 hours. It's really not a ton of time if you think about it. But in addition to that, we don't like to trade for that full 6.5 hours, as I'm going to explain a little bit more clearly in a second. In addition to the 6.5 hours of regular market open, though, we do have pre-market trading and after-hours trading. And I get a lot of questions about pre-market trading and after-hours trading, and what exactly that means for us as day traders. And kind of put it simply, the only time I really like to trade in pre-market or after hours is under some very special circumstances. I will trade in pre-market if I am swinging something. If I'm swinging a stock and it's gapping up big in pre-market the next day, then I will use pre-market hours to exit my position potentially. Not always, but potentially. Volume in pre-market is significantly lower than it is in regular trading hours, so sometimes it can be hard to get out at certain levels. But that is the time I would say the time that I most typically will trade pre-market. Now, as far as after hours trading goes, there are occasions when a stock will release positive news, FDA approval or positive earnings, or something like that, where after hours will present a good opportunity to get into a stock. But I don't do it very often, and I definitely don't encourage new traders to do it because it can take a while to get a good understanding of how volume and liquidity works in pre-market and after-hours trading. But just keep in mind that they are options. Now, different brokers will allow you to begin trading in pre-market at different times. The pre-market trading technically does open at 4 a.m., but the majority of brokers that day traders use will not allow you to trade that early. TD Ameritrade, E-Trade, things like that, you're not able to trade quite as early. So keep that in mind. Typically, most trading opens up a little bit closer to 8 a.m. or 7 a.m. Eastern time. So yes, it technically opens at 4 a.m. and that's why you will begin to see certain stocks move. And if a stock drops news at 4 a.m. Eastern time, you have the potential to see a stock really make some major moves super early. But a lot of times, day traders who don't have access to early trading like that, there's no way to get involved in that. And so just be aware that there are some additional risks with pre-market and after hours trading. Now, in addition to the regular 6.5 hours of trading time that we have from 9:30 a.m. Eastern to 4 p.m. Eastern, it gets a little bit more specific than that because you don't want to be sitting at your screen trading the whole day. And I think that's really hard for a lot of new traders to understand because as a trader you just want to constantly be if you think about it, the more trades I make, the more money I'll make, or the more time I spend watching my screen, the more money I make, the more opportunities there will be. And that's just not quite how day trading works. Day trading doesn't work quite like other jobs. There's other jobs where the more meetings you can attend, the more clients you can see, the more cars you can fix, the more money you make. That's not quite the case with day trading. When you are a day trader, you want to think of it, you need to be a lot more selective. Okay, it's much more about quality of your trades rather than quantity of your trades. Typical day traders, some of the most successful day traders I personally have interacted with will make, 4, maybe 5 day trades a day. And that's on a hot day. There's other days where they make 1, maybe 2 and call it quits. It just totally depends. So don't get ahead of yourself thinking that you need to be in every single trade and every single stock that's moving. Because if you do that, we call that overtrading. And overtrading is a very, very serious problem. It's a problem that plagued me early on in my trading career. And it's a problem that I'd say it's the biggest problem that new traders struggle with is overtrading. Okay. And so be very selective. Just, you may see a stock make a big 10% jump and think, oh, I got to get in this. And we call that FOMO, FOMO, which stands for fear of missing out. Don't let FOMO get to you. Don't let it play with your mind and your emotions, because if you follow emotions, more often than not, you're going to get burned and you're going to regret it. So don't let FOMO get to you and get in your head. Stay very selective, be very careful, be very strategic about the trades that you make. Now, what time do we want to be making these trades? As you see here, I have this up here, I have it as under trading windows, okay? These times here, the first hour and a half of market open and power hour are the most active times of the stock market. I'm going to explain that with a graph here shortly. And the reason why they are the most active times is just when the majority of trades happen. It's when traders are the most active and alert, right at the opening of the day and right at the closing of the day. Okay, so you may hear people often refer to power hour. Well, that's all it means is that it's the last hour of market open. So these times are in Eastern time. So power hour is 3 o'clock to 4 p.m. Eastern time. So really, if I really try to only make trades during this 2.5 hour time slot from 9:30 a.m. to about 11 a.m. and then from power hour to 3 to 4 p.m. I really try to stick to only making trades during the 2.5 hour time slot. Now I still may be watching my screens, throughout the midday and preparing for power hour. During midday, you can watch a lot of action in order to see what's setting up for power hour, but you really want to be careful trading in the middle of the day. There are exceptions, but for new traders, just kind of as a rule of thumb, I would encourage everyone to not trade except for those 2.5 hours of ideal trading time. And the reason for that is that you're going to get a lot more accuracy on breakouts and things like that. So I'm going to go into that a little bit more in a second, but this is a little graph here to help illustrate volume in the first 2.5 hours of the day and in the last hour of the day. So all those bars that have a green dot above it, that is the opening of the market. Okay, and the white volume bars that have a red dot on them, that is the close of market. Okay, so as you can, and this is just the S&P 500. Okay, this is just basically a general index of the overall stock market. So as you can see, there's no surprise that the highest volume bars, more often than not, are the first, and each one of these volume bars represents 30 minutes of trading. I was very clear about that. So as you can see here, typically the highest volume in the markets is within the first half hour and in the last half hour. Okay, and so that's why we typically stick to trading in those time periods, because volume is critical when it comes to trading. And as you see, middle of the day there, let me help illustrate this a little bit here. All these dips here, in this area, this is middle of the day. This is lunchtime. Traders are out at lunch. No one is really trading. That's why it's so dead in these areas right here, right in the middle. This is middle of the day. This is middle day. Now, this day in general had higher volume, but middle day is still relatively lower than opening and close. Here's another example, middle day right here. So being able to see this can hopefully help you visualize why you don't want to trade in the middle of the day. Volume in the markets is just not nearly as good. So I want to talk about volume and I want to talk about relative volume. Now, they're very similar, but the difference in understanding how they will affect your trading is critical. Okay, so just a general thumb again, it's important to know that the higher the relative volume, the more accurate the breakout you're trying to trade is. So whether you're trading a bull flag breakout or an ABCD breakout or a cup and handle breakout, or a breakout from a descending wedge. I mean, there's tons of breakouts, okay? And of course, we talk about those. I have lots of YouTube videos that talk about all sorts of different kinds of breakouts. But whatever the technical breakout is that you're looking to trade, your accuracy on that breakout, your follow through that you get from that breakout will be significantly higher if the volume is better. And you'll see I say relative volume. So let me explain the difference. Okay, volume in general is the amount of shares traded on a specified time frame, 1 minute, 1 day, 1 month, etc. So if we go, if you think of that chart that we had there right here, each one of these is 30-minute time frame. Okay, so when I talk about volume, in this case, we'd be talking about volume on a 30-minute time frame. Okay, each one of these candles represents 30 minutes. So in this over here is millions. So right here on this green dot, volume on this 30-minute time frame was probably about 7.5 million shares traded. Okay, now when talking about relative volume, it's the amount of shares traded on a specified time frame, but we're going to compare it relatively to that same time frame on a different date. Okay, so let me help explain what I mean by this. Let me pull out my handy dandy laser pen here. So let's talk about this day in general here. Okay, you'll see that the volume in general, the white lines here, are all quite a bit higher than other days of the week. Okay, this was a Friday here. There was lots of action here. which is a little bit surprising because Fridays actually quite typically can be slower days, a little bit slower days in the week, except for the afternoon. Friday afternoons typically will get lots of volume as people close out short positions and long positions because they don't want to hold into the weekend. But what do I mean by relative volume? Well, let's compare this candle right here. Okay, this is a 30-minute time frame right into close on Friday. Okay, this volume compared to the closing candle of this day is relatively higher. Okay, so when I say relative volume, that means we want to compare the same time frame, same time of day. Whether we're looking at 30-minute, 5-minute, or 1 minute, we want to compare that to other days. So the volume on this day into close was relatively higher than the volume on this day. So had we been trading breakouts on this day here in the last 30 minutes of market, our success rate on getting follow through on certain breakouts would have been significantly higher than it would have been on this day when volume wasn't as good. Okay, and hopefully I can continue to make that a little more clear as we move forward here. So keep that concept in mind, relative volume. Okay, so if a stock on average is going to trade 100,000 shares a day, but all of a sudden this stock is trading 3 million shares a day, the relative volume of that stock on a daily time frame for volume is significantly higher, meaning that breakouts typically will be more accurate. Okay, so here an example of this is Plug, Plug. Okay, this is a stock that we have traded quite frequently. This is a very high float stock, meaning that there are lots of shares to be traded on it. Again, I have lots of videos about high float, low float. I have readings within my chat room about what all that means. So if you're unclear about that, you can message me and we can talk a little bit more and get more specific about it. But here, looking at Plug here, let me pull out my laser pen again. Looking at Plug here, as I mentioned, this is a very high float stock. Okay, so volume in general on this is very high. You'll see each one of these candles again is a 10. This is a 10-minute candle of volume. Okay, so each one of these white bars down here represents 10 minutes. And in this gray, when you see this gray area on these charts, this means market is closed. Okay, so not nearly as many trades happen in these gray areas as you can see. Market is closed, volume is a lot lower. Okay, that's another reason why it's very risky to trade pre-market and after hours because volume is much, much, much lower. Okay, so let's start off by looking at this day here. Look at this volume that we have on this day right here, and note that it is relatively higher than basically all the other days here trading on this PLUG play. Now volume is still pretty good. I mean, this stock trades like 1.5 to 2 million shares a day, and you might think, wow, that's actually a lot of shares that are getting traded. And if you compare it to really low float, low volume plays that only average 100,000 shares a day, you might think, wow, Plug has tons of volume. It's always going to be awesome to trade because the volume is constantly so good. But that's why it's so important to consider relative volume. Okay, you can't look at a stock like Plug and say this thing is trading 2 million shares today, and because that's a lot more shares than a super low float stock that's trading 100,000 shares today, Plug's a better play. That's not necessarily the case because that low float stock could be trading at 10 times higher than it does on average, meaning it's trading with higher relative volume. Okay. So back to using relative volume here on this day right here on Plug that we have a low of 176 and a high of 213. Look at the relative volume on it. Okay, it is no surprise that this made an incredible move from 176 to 213 because look at the volume. Okay, when volume comes into stocks, more often than not, you're going to see major moves either to the upside or to the downside. Now, which way it is going to be whether there's recent news, things like that. That'll all help you be able to decipher which way the move is going to be. Now, there's something I really want to point out here with this Plug play, and let's go to that next slide here. I should be able to point it out. Oh, I talked about this already, high volume. Okay, we already talked about that. Relative volume, super important to understand. So let's zoom in on this day here on Plug a little bit closer. Okay, this is the same chart we were just looking at on Plug. Look at this volume. We're getting 800,000 shares traded a minute at its peak here. Well, the reason why I make such a big deal about volume is because when volume comes in over breakout levels, that's typically when you're going to get a lot better follow through. Okay, so let's start here. This 190 level, as you see right here, that's probably kind of hard to see. That's black. I don't know why that's black. What if we like this? That's a little easier to see. Okay, so this you see this 190 is a critical level of resistance. Okay, it got denied here. This is 3-day highs at 190. So as the stock was approaching this level, we were keeping on close watch. We actually traded this in the chat room because we were waiting for this to break over this 190 critical level of resistance here. Now, the reason why I'm making such a big deal about this volume here is because if this volume wasn't strong like this, relatively strong, I mean, look at this, over 500,000 shares traded compared to where was it at the day before at this time? You know, not even 100,000 shares traded. Where was it at the day before at this time? Not even 100,000 shares traded. So this is what I mean by relative volume. The volume is significantly higher than it is at other points in previous days. So relative volume is high, meaning that this is going to have a high probability to get follow through on a breakout over resistance. So in this case, this is just a trade over first critical resistance, 3-day highs over 190, and then later on over $2 natural resistance. I say natural resistance. Natural resistance is different than regular high of day or high over the last 3 days resistance. Natural resistance is going to come at every whole dollar level. Okay, whether it's $1, $2, $3, $4, $5. It can also come in at the 50 cents and the quarter levels as well. But look at the volume. So it's no surprise that we got such incredible follow through on this. Like I said, we traded this. I believe I waited to trade this over the $2 level, and we traded up with had a price target of about 210 or so. We bought it, 201 or so, sold up at the 210, 211 area for an awesome, 5% trade. It was fantastic for us. But the reason why we got such great follow through is because look at this relative volume. So when I'm scanning stocks to trade, this is what I'm looking for. Relative volume that is very strong. So that's showing that this stock is going to have a really good chance of getting follow through over this breakout level. Okay. Now also note the time of day. All right. So these time frames down here is Mountain Standard Time. So right here, it says 8:30. That's actually 10:30 Eastern Time. So this is still within our prime trading window here in the morning. Okay, this is when we like to see it. So everything lined up fantastic with this trade. It was in our prime trading window, first hour and a half of the day here, and volume was relatively higher than it was on previous days, meaning that this stock had a lot of strength moving over those levels of resistance. So that's going to wrap up my recorded portion here of this. I'm going to go on and talk to members and things about, and answer different questions as well as review some stocks and prepare for the week ahead. But here's the website, kfinvesting.com if you want to check us out, or follow me on Twitter. So thanks for watching. I'm going to end the recording now.